Buenas and half a day, and welcome back to another Project PROA video. Today, we'll be talking about your credit score and you, looking at your credit score. My name is Alyssa Attao, and presenting with me today, we have Mr. Jaden Sanchez. A quick disclaimer before we get into the video, the information provided in this presentation is based upon our own research, and may differ from what you know, and we may be missing certain points. If you have any additional information that you would like to share, please leave a comment below so future viewers may benefit as well. Thank you, and let's get into the video. So some terms to know. Jaden and I will be using these terms throughout the video, and they're also just useful to know when talking about credit score. First, we have credit worthiness. This is how a lender determines that you will default on your debt obligations, or how worthy you are to receive new credit. Then we have utilization rate. The amount of money you can use every month versus the amount of money you have access to. Then we have secured credit cards versus unsecured credit cards. So a secured credit card is nearly identical to an unsecured credit card, but you are required to make a minimum deposit, known as a security deposit, to receive a credit limit. When applying for a new credit card, most credit card companies will start you off with a secured credit card, and then once they know that you are able to pay back what you owe them, then they will give you an unsecured credit card. And then lastly, we have the credit limit. Your credit limit is the maximum outstanding balance you can have on a credit card or a line of credit card without being penalized.
Alright, so what is a credit score? A credit score is a number between 300 and 850, which indicates a consumer's creditworthiness. A higher score means that a consumer is more than likely to get a loan from potential lenders. A person's score is based on their credit history. Higher credit scores most likely mean lower interest rates.
Now, we're going to talk about types of credit. There are two main types of credit a person can avail of. First, we have revolving loans. So a loan that extends borrowers a line of credit with no determined end time, and they can spend up to their assigned credit limit. So the biggest example of this would be a credit card. And then we have installment loans, a loan that offers a borrower a fixed or finite amount of money over a specified period of time. So this would be your car loans, your school loans, or your mortgage.
Alright, so let's talk about more what a credit score is. The credit score model was invented by the Fair Isaac Corporation, or FICO. The FICO score system is the most commonly used. Some ways to improve one's credit score include repayment of loans and keeping debt at a minimum.
So this is an example of the FICO credit score range. In the poor, we have around 300 to 629, average is 630 to 689, good is 690 to 719, and then an excellent FICO credit score would be 720 to 850.
Alright, so how does a credit score work? Credit scores have a big impact on a person's financial life. Depending on where your credit score lies between the numbers can affect the perception of you to the lender. A person with a credit score below 640 is considered a subprime follower. Subprime mortgages are often charged more on interest due to high risk compensation.
Now we will be looking at the 5 factors responsible for your credit score. First, and the largest, is payment history, which takes up about 35%. Do you pay your bills on time? Being late, underpaying, or missing payments in general will damage your credit scores, as lenders will see you as unreliable and careless. Next, we have amount owed, which is about 30%. How much money do you owe, or how much money have you borrowed? Owing too much money or carrying over payments to the next month lowers your credit and makes it more difficult and riskier to take on new debt. Next, we have length of credit history, which is about 15%. How long is your credit history, or how long have you been borrowing money? Having a long credit history gives more information on your spending habits, and if you are able to pay back what you owe, it sends a positive message to lenders and will bring up your score. Next, we have types of credit, which is about 10%, the type of loan you have. Like we discussed before, there are revolving loans and installment loans. And last but not the least, we have new credit. How the frequency of looking for or applying for new credit. How many cards are you applying for at a time? Too many applications for credit can mean that you are taking on a lot of debt or that you are in some kind of financial trouble.
Alright, so here are some factors that don't affect your credit score. Number 1 would be the amount of money you possess. Number 2 would be your income or how much money you make. Number 3 is debit cards. And number 4 is using your credit card at a gas station frequently.
Next, we'll be moving on to tips to build or maintain your credit score. First, and the most important, never carry your credit card balance on to the next month and always pay off your credit every month. Doing this ensures that you look responsible for your money and that you are on time. Next, use no more than 10% of your total monthly allowance and at least 1% each month. So, for example, if your monthly allowance for your credit card is $1,000, you should only use up to 10% of that, which is $100. And also, it's important to use at least 1% every month because not using your credit card at all will hurt your credit score. And last but not the least, do not apply for more than 2 cards at a time. Card companies will inquire about your credit score, which will negatively impact it, and at times this can take up to 2 years to fall off.
Alright, so now we're going to talk about the advantages of good credit. Getting credit at favorable terms, more qualified for loans, mortgages, etc. Securing employment, reflects you are responsible with your money, which is admirable. Approval for apartment or home rentals, landlords are more likely to pick and trust someone with good credit. Lower insurance premiums, higher credit scores, they say, are associated with a lower rate of filed claims, and lower credit scores often mean more filed claims.
Lastly, we're moving into how to check your credit. First, you can visit a free credit scoring website. However, it is important to pay attention to the terms and conditions before you sign up. Most of the websites will often have an educational explanation of how you can understand your credit score. Next, you can also check with your credit card issuer or lender. Many credit card and car loan companies often offer complimentary credit scores that you can check by logging into your account online or receiving on your monthly statement. Typically, you have to opt to receive this number. And last but not the least, you visit a non-profit credit counselor. Credit counselors can often pull your scores for free and go over the details with you. To find one, check with the National Foundation for Credit Counseling.
Alright, so before we end our presentation, here are a few resources you can look at to find out more about credit scores and other related information. Alright guys, that about wraps it up for our presentation on your credit score and you. If you'd like to see more videos like this, check out the NMC YouTube channel where Project PROA releases videos on financial literacy, academic series, and other related subjects. And once again, thank you for watching and have a great day.